Hello, my name is Arlene Chinyanganya, founder of Roots to Fruit, the financial wellness platform. Roots to Fruit started in 2020 off the back of the pandemic. There was a lot of financial uncertainty with people on furlough, businesses closing. It was just an uncertain time. It's still not quite certain what's going to happen from now on, but it's kind of calmed down a little bit. The point of Roots to Fruit was to spread financial education, just to form a community with people that want to better themselves, or people that just want to get a little bit more clued up on how they can look after their finances. Previous videos, I've kind of explained the link between financial well-being and mental health. And you can see those posts. I'll post a couple of links in this video so you can access them. But this is something that we need to continuously discuss and talk about. So apologies, I haven't posted anything for a while now. And so thank you for bearing with me. However, I have been going to in-person events, whether I was speaking at a few events or perhaps kind of going as an attendee, and it's been really great. And at one of those events that I attended, I listened in to David Miller, who talked about generational wealth. And I thought this is really great for the Roots to Fruit community to hear and to educate themselves. So hello, everybody. Welcome back to Roots to Fruits. Sorry, I haven't posted for a while now, but we've been doing loads of in-person events lately. And one of the events that I went to, the UK Black Business Show, I met David Miller. David has agreed to join us on this call to talk about a subject that I feel like it needs more light, discussing generational wealth. David Miller is the commercial director for non-financial corporates at S&P Global Market Intelligence. Hi, David.
Hello.
Thank you for joining. How are you doing?
Yeah, doing well, thanks. Thanks very much for having me. Great to have met you at the event and really glad to have the opportunity to continue the discussion.
Yes. Brilliant. So could you tell us a little bit about yourself and really what inspired you to discuss this topic?
Yeah, absolutely. Well, you did a great job of the introduction. So I work at S&P Global Market Intelligence as a commercial director. And what really got me interested in this topic was, well, firstly, the organizers at Black Business Week asked me to talk about it. So that's always a good way of getting you interested in a topic. But on a more personal note, my parents came to this country as Jamaican immigrants in the 50s, and it wasn't really a great time to be Black if you had grand ambitions financially. If you were an inhabitant of one of the Commonwealth countries and you could afford the passage of £28 and 10 shillings on the Empire Windrush or one of the similar ships which took people across, and most people could not afford that, by the way, because that was about £1,000 in today's money. If you could afford it, you were greeted with an environment that was pretty hostile, in many aspects of life, which we all take for granted today, were much harder back then. So it could be hard to get rented accommodation as a Black person. It could be difficult to get work. It could be difficult to get a mortgage and so on. And in that environment, the concept of fiscal responsibility really amounted to a couple of things. It was really what you had saved and what your income was. It was less about generational wealth because most Black people did not have the benefit of that coming from third world countries. So they were really, in the widest possible sense of the term, self-made people, because if they did want to convince the landlords that they were responsible tenants, or to convince the bank managers to extend them a line of credit in the form of a mortgage, then they really had to do that themselves. They had to save themselves. They had to exhibit financial prudence and show that they were creditworthy, that they could cover the monthly rent or mortgage payments. So they really had to fend for themselves in many ways. And so for me, the concept of generational wealth is really important to move the Black community forward, because it's something that I think many other communities have enjoyed across many generations. And I think it's something that as a community, we really want to have at the forefront of our minds in order to move the Black community forward financially, because there is just such a strong correlation between generational wealth and inheritance and financial wealth, property wealth, pension-based wealth, and physical wealth today. It really is the bedrock of so many people's success. And the old saying of "it takes money to make money," or which is effectively the idea that you need capital injection to be successful, is of course true. You can't set up a business without some type of capital injection. You can't get a mortgage without some type of capital injection. You can't make investments without capital injection. So that concept of generational wealth, which is often for many of the world's wealthiest communities, the starting point for them, it really is the launch pad that takes them to many different places in terms of financial success and business related success, is really important from that perspective. And so that's why I was keen to get involved and have a discussion about that.
Yeah. Well, thank you. I think you've kind of educated us a little bit as well in terms of what generational wealth is, but something that kind of was highlighted from what you've just said was around the fact that your parents, for example, were first generation here, so they needed to establish their roots just to maybe rent somewhere, maybe get a mortgage if they can. And now perhaps we're a little bit more privileged to be even thinking about generational wealth because they set down those roots at that point. So I guess that's something to always remember, that there's a lot of work that has been done to get us to have the privilege to even start thinking about the generational wealth for our kids, for example. But why do you think it's important kind of for the Black community, wherever they're from, to improve their generational wealth? Why is this an important subject for you?
Yeah, sure. Well, maybe I'll just sort of take a step back and just more clearly define what generational wealth is. As you mentioned, I touched on it, but it's very simple. It's generational wealth is wealth that just gets transferred from one generation of a family to the next, and to the next after that, and to the next after that. So it can consist of a few different things. It can consist of financial wealth or financial assets. These are things like cash and securities like stocks in the stock market or bonds. It can consist of ownership of a family business. That's all the financial wealth. It's also, of course, things like property-based wealth, right? That is often a part of generational wealth. You own a property, you pay off the mortgage, you pass it on to your kids, and that's often a way in which different generations will be able to monetize their generational wealth by selling that property or by renting it out or doing something to monetize the property that they've inherited. So that's effectively real estate. There's pension-based wealth to the extent that still exists at the end of someone's lifetime, and the portfolio that they're able to amass within that pension, which again can consist of a number of different types of assets. And then there's physical wealth, which is really physical objects. It can, at the upper end, consist of things like collections of fine arts and fine wines. At the lower end of the scale, it can just be things like jewelry or watches or cars, things like that. So that's really generational wealth. But I think, again, the reason that it's important is because there is just that extremely strong link between the wealth of an individual, and you can look at that in many different ways. You can look at that as net individual wealth. You can look at that as net household wealth. But typically what we tend to see in those groups that enjoy higher levels of wealth is that the inheritance that they were lucky enough to receive tends to be higher, right? So they have that initial launch pad on which to be able to invest and to take even further. And I think that's something that's really important for us in the Black community to remember, that the accumulation of wealth doesn't stop with us, but it continues to future generations as well. And as I did some research on this, so a couple of fairly pessimistic evaluations of Black wealth in the form of research reports that I read recently. One of those was written by the Resolution Foundation, and that focuses on the ethnic wealth divide here in the UK. And the other one was written by McKinsey in 2019, which is a bit more US centric, but effectively the conclusions of both are pretty similar. The title of the Resolution Foundation report is A Gap That Won't Close. And it really looks at the wealth gap between groups of Black ethnicities, such as Black African, Black Caribbean, Black mix, and then more affluent groups, such as white British and Indian households. And the latter, Indian households, who sit at the top of the grid in terms of household wealth, they have a very strong culture of generational wealth, of building wealth and of handing it down. And there's a lot, I think, that can be learned by Black communities from that, where our generational wealth or inheritance tends to be much, much lower. And that makes it harder for future generations to invest in the way that we want to invest in businesses and to invest in the markets, to buy assets that will appreciate over time. And of course, it's not just about inheritance. We all, as individuals, have a responsibility to build what we can ourselves, but it makes it easier. That capital injection at the beginning of a career, which allows you to put down a deposit on a house, which allows you to pay off your student debt so that you are not continually plowing money or funds into that, and which allows you, if you are entrepreneurial, to invest in a business. It just takes that much longer to get to without the generational wealth that we're talking about today. So those are some of the reasons why it's really important to me, and some of the reasons why I think this was just such a great topic to discuss during Black Business Week.
Yeah. Brilliant. Thank you. I was just jotting down some notes, and one of the things that kind of popped out was around kind of culture. It's the culture of maybe togetherness and making sure that we're looking after future generations. As you said, the Indian community are managing to do quite well. So that's something for people to note in terms of how are we even thinking about this? Are we thinking about future generations? But thank you for sharing those statistics. So if I could get a link to it, then I could add it maybe in the email that I'll send around. That would be great for people to read through.
Yeah.
So now we know the problem, or we're aware of where we're at and how we got here. So is there, maybe from your perspective, whose responsibility is it to level up kind of the generational wealth between the races and kind of level up the Black community to get up there a little bit? Whose responsibility is it from your perspective?
Yeah, well, I mean, I think it's the answer to that is pretty complex, and I mean, I think it is the responsibility certainly of the Black community, but I think there are other factors that come into play, as well as being kind of inward looking and looking at ourselves. There are other factors that come into play, which I think it's worth talking about. The wealth gap between Black and other wealthier communities, as we know, comes down to a lot of different interdependent factors. So there are issues with pay inequality on ethnic lines, and the dual wage penalty of ethnicity and gender. If you were, say, a Black woman, there are labor market inequalities. There's a shortage of social and professional connections in the highest paid sectors, and that's one reason that company referral schemes are frequently so penalizing of Black people. It's typically people from other communities, usually the white community, that are referring their white friends to where they work. And so, and then you have the catch-22 knock-on effect of all of these things, such as limited access to the best education, many other factors which we probably don't have time to cover today. But as we kind of look inwards on ourselves, I think there are a couple of things that we can impact before we look at the outward factors. And so I think one of the things is financial education, and specifically getting comfortable with the concept of financial risk, as we've kind of talked about the different types of wealth. All risk is not created equal. It's very important that we each take on a level of risk that is comfortable for each of us and meets our risk profile beyond just saving. And in the US, there 86% of white Americans with an income of at least $50,000 are invested in the stock market or mutual funds. That's a huge percentage that are investing in the market. And that number drops quite substantially to around 67% for Black Americans who have the same level of income of at least $50,000. So when we think about what we can do, it's extremely important that we get educated financially, we think about financial risk, and that the investment in securities that we see in the Black community starts to match that of that we see in the white community. The other thing, we touched on this earlier, is asset allocation. So across those 4 key areas of wealth that we talked about: financial wealth, property wealth, pension wealth, and physical wealth, which is accumulated, the latter is accumulated, things that are accumulated in household contents or vehicles and possessions and valuables. That physical wealth, the purpose of it is really just to generate satisfaction, but it's unlikely to yield much more than that. That tends to decrease for groups with a higher average total wealth. So the wealthiest groups instead focus their funds in financial investments, properties, and pensions, so the other 3 areas of wealth, rather than physical wealth, which again is just there really to kind of entertain you or to satisfy you. Now some aspects of physical wealth, as we talked about earlier, like having a wine portfolio or something like that, those can appreciate in value, but typically really physical wealth is more about the trappings of wealth, and in my view it really isn't wealth at all. So the Asian, Indian, and white British ethnic groups tend to put between 20 and 25% of their funds into physical wealth, whilst Black Caribbean and Black African groups put up to 51% of their cash into physical wealth. So we really have to focus on putting our funds into things that are important, right? Putting our funds into things which will appreciate and gather value over time, and not just in our lifetimes, but in the lifetimes of future generations as well. And that typically tends to happen more with things like securities. It happens more with property, and it happens more with pensions and the assets that we put into our pensions. So that is a point that I think is really important for us to think about, that those other types of wealth are frequently long-term assets which can be handed down through inheritance to future generations. And there's an extremely high correlation, as we said, between high levels of wealth amongst ethnic groups and high levels of inheritance, which is no surprise. So yeah, those are just a few comments to share on that.
No, thank you for sharing. I mean, there's some really helpful kind of tips in there, helpful things for people to think about in terms of how can they kind of change things around to be able to increase their wealth that they can then pass on in the future. And that's such a good point that you pointed out in terms of physical wealth. I definitely do look at my budgets each month, and then I do see that I'm not investing as much as probably I should do. So thank you for pointing that out. I feel like that was a note to myself. So I'll definitely kind of review and pass on the word. So hopefully other people are kind of thinking about this and having it sink through kind of why it's important to think about where you place whatever amount that you get on a monthly basis. How are you distributing it, and it's going to help out long term. So
that's exactly right.
Yeah, brilliant. Thank you. So in terms of what people can do tomorrow, is there anything that you can say, this is a simple kind of a fix in terms of what you can start? You did mention financial education, so I feel like that's one quick win for people to just sit down and get clued up on how they can review their finances, how they can improve them, just getting a little bit more knowledgeable about what's available out there. I feel like we do have, a benefit being in the UK to be able to do that. But are there any other kind of tips that you can give people, something that they could implement tomorrow, for example?
Yeah, I mean, I think, as I mentioned, the concept of financial education is very, very important. And I would say that start simple. We all know the importance of saving, but in this environment where we have very, very low interest rates, we have had for a very long time, it is not a benign, i.e. a favorable environment for savers. It's just not going to make you any money in real terms, especially with inflation going up. In fact, you're more likely to lose money over the long term at the moment if you're saving. So the idea is to get educated financially, and an easy place to start is with the stock market, stocks and shares, and FTSE 100 companies, and understanding the sectors to invest in is a really easy place to start. One simple way that people can start to benefit from the stock market is to invest in a tracker fund.
Right.
And tracker funds effectively track the performance of an index like the FTSE 100 over time. This is not investment advice, but I'm giving you an opinion. And if you look at the performance of the FTSE 100 over time, it's hugely outperformed anything that you're ever likely to get in savings. Now, of course, one has to be comfortable with the concept of financial risk. But again, with the FTSE 100, it's a relatively stable index. And if you invest in a tracker, you're spreading your risk across all of those 100 or 102 companies, however many it is at the moment. And so I think that's something that people can start to educate themselves on straight away, how they can diversify their funds into the stock market. We talked about understanding the different types of wealth and asset allocation away from physical wealth and into property, into financial assets, and then into your pension as well. But then the last thing I think is really just kind of, I'm going to term it understanding your strength. And I mean that individually, but also as part of the collective Black community. It has never been a better time to lean in. If you are a Black employee seeking your next promotion at the company you work for, or if you are an entrepreneur going through a round of VC funding, the current focus on ESG, and particularly the S of ESG, that social aspect, means that diversity is more important than it ever has been in the past. Now, the pandemic did put a number of diversity and inclusion initiatives on hold. But even despite that, venture capitalists and investors and hedge funds are, for the first time in their history, understanding that profits can be generated at the same time as having a social conscience. And more importantly, their clients expect this of them also. Deloitte also did some research recently that has shown that companies with a more diverse employee base typically outperform when it comes to the profits that they report on an annual basis. And so we know that there is more than just being nice and having a social conscience around this. This actually leads to profit as well. And so it's really important that as members of the Black community, and beyond the Black community, just the ethnically diverse community, shall I term it, we understand that strength, and we understand what we can bring to companies that work with us, that engage with us, and that invest in us. The UK's Commission on Race and Ethnic Disparities recently recommended actually that all employees voluntarily report pay gaps among ethnic groups to identify and rectify these disparities. And so it is starting to find its way. It's not a regulation yet, it's not mandatory, but it's starting to move in that direction. And when it does become mandatory, which I think will happen, companies don't want to be caught on the wrong side of the line, given the public statements and talk tracks that many of them are making with regards to the importance of diversity. And so they are seeking ethnically diverse talent at all levels, particularly board level where we are grossly underrepresented. So if anything, I think that last point about just kind of leaning in is really important, and understanding your strength as an individual, but also collectively as well.
Oh, thank you for mentioning that, because that will empower people. It sounds like basically there is support from the top in terms of the numbers back it up. You can get, a profit from employing a diverse group of people, and from all angles, there is a little bit more pressure, I suppose, for companies to have a diverse group. So I'm hoping that young people, or whatever age anybody is, and they're looking to kind of move up, then they are empowered to do so, because now there isn't that block, hopefully, that we could see before in previous years. So it's a great time right now, as you said, for people to be empowered to go for whatever their dream is and move up. So thank you for mentioning that.
No worries.
Yes, I won't keep you too long. This has been really great. Thank you. But if anyone has any questions or follow-ups, can they reach out to you?
Yeah, absolutely. I'm on LinkedIn. That's probably the best way to get in touch with me or to engage. I'm very happy to answer questions on LinkedIn. I would say probably the best way just to reach out. And like you mentioned, I'll forward a couple of links for people who are interested and who just want to read a little bit more about this, because it is an extremely interesting topic. I'll forward a few links to you that people can read. And happy to get it more engaged in this discussion and to speak with anyone that's got an interest in conversing more on this.
Yeah, brilliant. I mean, just you talking about it and us kind of having this conversation already, I feel like it's in the right direction. If we get a little bit more educated on what does the subject even mean, how can I turn it around for myself, and hopefully that's what people got from this conversation, then already I think that starts to change things. So
great, glad to hear that. Good.
Cool. Well, speak to you later.
Thanks, Arlene. Cheers.
Oh my God, that was such a great session. I feel like I learned quite a lot. David mentioned quite a lot of things that we can try and do for ourselves individually, as a family, as a community, to be able to improve our generational wealth. So where we place our money is quite important. And that was a key thing that he mentioned that resonated with myself, thinking about investing in assets that bring in a return. So long-term investments, I definitely need to look into where I'm placing my money on a day-to-day basis, and also just reviewing ultimately, are there any other ways that we can help each other within the community. So that's the agenda of Roots to Fruits, to spread financial well-being and just building a community. So if there's any way that you can also spread what you've learned from this session, I really encourage you to do it, because that's the whole point of starting this platform. With that said, there will be more videos coming up on different topics. Please let me know on what you'd like for myself to discuss, or I could reach out to other people to interview, and I'll post it up on this channel. Please subscribe if you haven't, or just reach out. I love to have a chat. So you can just reach out to me either on LinkedIn or emails. I'll post the link to how you can subscribe to Roots to Fruits below. But yeah, thank you for joining.